I'll tell you exactly why Google and Tesla are down big today, bringing the entire market down with it. And beyond that, another group of stocks also being down on the same day, which raises a little bit of a red flag for the current bull market. I'm also going to share a little story to better explain how and why Google is down just so much on the back of what was really actually great earnings. So we dig into all of that. Before I begin, I must remind you this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information found on ankerstarwealth.com, and the opinions expressed are mine alone. Okay, one thing that folks do forget when investing in single stocks is that the stock itself matters, sure, but also the broader environment matters. What environment are you investing into at the stock market level? So we'll look at that and then get into Google and Tesla specifically. Again, the S&P 500 down about 1%, not the end of the world. Actually, if you've been watching the channel, we're still trading in that same range we've been in. So nothing nothing crazy at the index level. But if we go look at bonds, we see the 10-year, okay, it broke above that May high here. So again, debt getting more expensive, potentially signaling future inflation. There's a few different problems with this. The value of future cash flows is worth less, right? Because for companies, because rates are higher, so you're having to discount those future earnings more. So there's a few different signals here. We're not like broken out of any real, we're not in uncharted territory going back to 2023, but we are not moving the right direction. If we go a little further, let's go look at bonds. Let's go look at that 30-year. Actually, I haven't looked at the 30-year this morning. So 517 on the 30-year. Okay, about at the same peak level we saw in May. So we're right on that line. And it's not like 5% is the end of the world, but it's more about what it means. If debt is going to continue getting more expensive, let's say 30-year gets to that 6.5%, which we hinted at as a potential outcome a few days ago, you're going to be in a situation where stocks are not as attractive. If we go check out oil, there does appear to be some additional developments, drama, whatever going on in the Middle East, causing oil to go higher. Remember again that a lot of countries around the world have depleted some of their oil reserves to account for the missed supply in recent months, and they will have to fill that up. So they're just delaying demand. They're not solving a problem, right? They're delaying future demand. We could see higher oil prices depending on how long this goes on in the Middle East. If this goes on, say a year or more, you're going to be feeling it. The entire world will be feeling it at that point, and then eventually having to refill those reserves, which could create an extended period of time where oil has just extra demand that can't be met. Okay, we do have the dollar moving a lot higher today. So I don't have the Dixie pulled up, but you could see that the euro is weakening, the dollar is strengthening against these other currencies. If that continues, precious metals priced in dollars will continue to be under pressure. And then Bitcoin doesn't tend to trade on currency related stuff. Really, it's a little bit more of a risk measure kind of asset, but some folks do view it as an inflation hedge, and a stronger dollar would potentially mean a weaker Bitcoin. All right, let's go jump over to Google real quick on Tesla. Tesla, they did kind of get revenue going higher again, but they did it at the expense of margin. So they're sacrificing margin to grow revenue. It's like, well, okay, anyone can do that, right? Anyone could say, you know what, we're going to sell this commodity, this water, this anything. We're going to sell these iPhones for cheaper prices so we can increase revenue. And it's like, okay, you can do that, but you're not strengthening the business, right? You're just kind of sacrificing one part of your business, the a margin profile, in order to increase revenue. Tesla's doing some of that. If you own Tesla here, you're probably not worried about Tesla in 2026. You're thinking about Tesla in 2036. So, I wouldn't be deterred by a 13% down move today because you're worried about the next decade. Okay, jumping over to Google. So Google is a company that does get priced on what they're doing right now, not what they're doing in 2036. Google had a really sensational earnings report. 24% revenue growth year over year, 17% in search. This is like an acceleration in some cases on the revenue and the search. Google Cloud, 82% revenue growth with a $500 billion backlog. There is, I'm not going to get into all the details around that, but some of that is potentially not a guarantee, okay, for them. Gemini doing 22 billion tokens per minute versus 16 billion last quarter. YouTube revenue double digits. About 1 billion monthly active users on the Gemini app. So these results truly are staggering and amazing, but the stock is down big. And I'm going to share a few things. One, quarterly Capex spend, okay, on property, plant, and equipment. Quarterly. So you go 4 quarters ago, it doubled year over year, right? So from 22 billion to 44 billion. Okay, that's not good. Okay, what about free cash flow? Is Google turning in good free cash flow as a result of all this spend? Well, no, actually they're spending even more and more aggressively, and they've reported their first negative quarter of free cash flow in the history of the company. Okay, that's not good. So obviously they're spending aggressively on this, on AI, right? And because they believe that they're going to see a massive windfall of profits as a result of the progress they make in AI. And it is true that if people are like, Google, I'm going to pay you for compute so that I don't have to pay all these employees, there is potential there for Google to see a massive new kind of business as a result of these AI investments. But how are these AI investments going? Well, Google announced a couple of weeks ago that they are unhappy with the progress in their flagship AI models. The models are delayed by months, and they don't even meet the internal benchmarks that the company has set for themselves. Okay, that's not good. So we have, of course, great results, but we've got really crazy Capex spend. We've got Capex spend to the extent that free cash flow is now negative. So cash is falling, in the quarter, year over year, all of that. So cash is being depleted, and we aren't seeing the fruits of this investment in the sense of like an AI progress, AI related revenue. So this is so bad. And in the quarter, Google announced this. They're going to increase. So they had originally said they were going to spend about 185 billion this year on Capex, and now projecting that to be closer to 205 billion. So like, hey guys, also shareholders, we're going to accidentally spend another 20 billion this year above and beyond what we had thought. So I hope you're okay with that. Well, shareholders aren't okay with that. The stock's down 7% as a result of it. Google's a great company, but shareholders aren't going to stick around for senseless investment that isn't even resulting in progress or profits to justify the investment. And here's how you know it's really bad. So Google is essentially sacrificing themselves here, their own profitability, right? Their own free cash flow, and without really receiving truly great returns on these investments, and they could come later, and Google would tell you that they will, and that's fine. I mean, some Tesla's also saying things will come later, and that's fine too. But investors get sick of waiting around for later, right? It can't always be the first inning. That's not how baseball games work. At some point, you've got to progress, second inning, third inning. So if you're constantly saying it's the first inning, the profits will come later, people do get sick of that. And you can tell that people are so sick of that here, because the companies who benefit from Google accidentally spending another $20 billion this year, those stocks aren't even higher today. The semiconductor stocks aren't even higher on this news, because the semiconductor stock owners, those shareholders, recognize that, hey, Google shareholders aren't going to let this go on forever. And we would really need Google shareholders to be okay with them spending all of this extra every single quarter, every single year, in order for our profits to be safe. But if Google shareholders are rebelling hard enough, then this isn't going to, that's eventually going to affect what we are able to realize in all of this. And last thing here, I thought of a little analogy. Okay, so Google, let's say Google's a spouse, doesn't matter, wife, husband, whatever. Google's just a spouse who has an idea to redo their backyard. And they tell their spouse, oh, we're going to redo the backyard, get a nice outdoor living space. I want to have something nice to see. We have a nice backyard, but I want to have something that invites us out there, allows us to invite company over, have a nice TV, gazebo, outdoor living, all of that furniture. We can eat out there, enjoy the shade of all the beautiful trees we have and all this. And I'm going to do it. I'm going to spend $185,000 on this. And the other spouse is like, oh my gosh, okay, wow, that sounds really good. Okay, so the Google spouse, a year goes by, 12 months go by. Well, now they're spending $205,000, and the backyard doesn't even look like this. The gazebo's not even done yet. The other spouse at some point is going to be like, hey, Google, this isn't working, and you made a really bad plan here. If you make a plan, you're supposed to come in on time, or you're supposed to really come in early and under budget. And now you're coming in late and over budget. And that's not going to work. That's not really good for our financial future if you're making these plans and over budget. So Google, they're late, they're over budget. The shareholders, the other spouse, are really unhappy with this. And we'll see how it evolves from here and what happens. Google's a great company. They control their own destiny, but they're going to have to eventually either realize the AI profits or cut back on the spend. And I do sympathize with these companies. These hyperscalers are in a weird situation. If Google was the first one to say, that's too much, little too much pain on the spend, we're going to pull back, the market would kind of view them as giving up and like ceding leadership, AI leadership, to one of the other competitors. So I do sympathize with that Google kind of, you don't want to be the first one to give up, because then it looks bad in that sense. But then if you're the most aggressive on spend, then you're putting your company at the most risk of future pain, right? Because you eventually have to be good for all this money that you're spending, right? And you have to make up those profits elsewhere, which Google can do. But it's starting to get stressful for sure. Thank you so much for joining us. I hope everyone has a wonderful day. Will these companies ever get the spend under control? We will see. All right. Thank you for joining us. Talk to you soon.